Hi everyone, and welcome back to another video. I took a quick break and we are back, and I have some really exciting stocks to go over. And definitely watch till the end, because at the end I'm going to be covering SFLM, which is a stock that has been a huge buzz online recently and one of my personal favorites in the OTC right now. And we're going to be covering a lot of the in-depth speculative due diligence on SFLM at the end of this video. So definitely stay tuned for that. But I have a super strong lineup of stocks that I'm going to be covering in this video. Very exciting stocks happening in the OTC right now, and money has been flowing back in. So should be a great fall, and without further ado, let's dive right into it. The first one we're going to be taking a look at is GXXY, which if you follow me on Twitter, you've seen me talk about quite a bit. Definitely one of my favorites right now. Now, full disclosure, I am a consultant for this company, and I've chosen them as a partner because they're a fantastic company and they have really strong roadmap for growth coming up. So we're going to be talking about that and talking about why I like these guys so much and what they're doing right. So first and foremost, we're going to take a look at the share structure as we always do. And you can see they have about 240 million outstanding shares, and but most of these are restricted, right? So there are 175 million are restricted. You have 65 million unrestricted, but a lot of these unrestricted are actually not trading. They're not free trading shares. They're actually still being held by their owners. And we can see that in the held at DTC. And we've talked about in other videos where the held at DTC is the true float with the free trading shares in the market. And the held at DTC here is only 7.5 million. So it's a 7.5 million float. And that's a very small float. And that means, as we've discussed in previous videos, that you can see huge volatility to the upside with floats this low, right? Because not a lot of shares available. So when there's a high demand for shares, the price can really move quickly. Okay, so great share structure for GXXY to start us off. So let's talk about what's been going on with this company. They're working on an audit right now, and they're working on launching a few different direct sales and marketing types of subsidiaries and projects that are coming up this fall. October, they're launching Galaxy Direct, which is going to be a huge sales and distribution subsidiary for them that's projecting huge revenue there. And then they also have Wellbeing Farms, which is one of their primary subsidiaries, which is working on medicinal mushroom and possibly psychoactive mushroom products in the future as well. And then they have their Delta 8 and their Delta 8 products and their vending machines, right? So let's take a look at their recent news release, which is Galaxy Holdings revenue growth strategy, right? And so there's a lot of key points to highlight in this news release. We have Wellbeing Farms here, which is 100% owned, expects to generate 7.5 million in revenues from its first full year of product supply to Galaxy LLC. And then we have Galaxy LLC, which is 60% owned, is targeting revenues of $10 million in its first 6 months following its Q4 2023 enrollment, and this is expected to launch in October. So when this launches in October, we can expect 10 million in the first 6 months of revenue from launch. And so then in 2024 in total, they're projecting 20 million total revenues from Galaxy LLC alone. And then we have VendGenie as well, which is their proprietary vending machines with proprietary software. They have facial recognition for age-restricted purchasing and things like that. And they already have vending machines all over Texas. They're expanding to Chicago, Pennsylvania, etc. And so these kiosks right now, right, are going to be looking at $3 million in revenue by the end of its first full year. And then it's going to increase to $12.75 million in revenue in year 2, with a total of 600 kiosks to be rolled out, right? So that's really remarkable revenue projections for penny stock, especially in OTC stock, where most of these companies that we work with and we're dealing with are doing, $500,000, maybe $1 million in revenue. These guys are looking at around $30 to $40 million of revenue projected for 2024, and they already have a couple million of revenue on the books, right? So these businesses are already making sales. It's not like they just started and they're just pulling these numbers out of their ass, but they actually have, sales already coming in, and they're really, if you look at their last quarterly compared to the quarterly before that, you can see as well that the revenue is increasing. So all of that's great stuff, and I do believe they'll meet their revenue goals. And then they also have ABC Holdings, which is currently generating over $1 million in revenue as is, and they anticipate a 2x increase in ABC Holdings Avalue sales in this coming year. So 2024 is lining up to be a huge year for them, and really it starts this fall, right? Because with Galaxy LLC launching, or aka Galaxy Direct, as I mentioned earlier, that's going to be huge. It's going to immediately start bringing in a big amount of revenue growth. It's going to reflect on the filings, and people are going to see, okay, this is the real deal, right? If we take a look at, here is Wellbeing Farms website, and what they do is they sell these medicinal mushroom products, and this is just one of their subsidiaries. So they also have their Delta 8 subsidiary in their vending machine business as well, but this is like kind of their main brand, and these are all natural, all organic supplements made from real mushrooms. And I actually use the products. I take them every single day, and they work fantastically well. So I take the tincture, and I also take the capsules. I take the Focus Blend capsules. I take the Energy Blend capsules. I take the Wellbeing Blend capsules. And then at night, I take the Sleep Mushroom tincture. And so, this company's, of course, already generating sales. I actually know someone else that buys their products as well and uses them on a daily basis. And they really do work quite well. You do get that boost of energy and focus. And it's a sustained type of good feeling throughout the day. Like there's no crash or anything like caffeine, right? So it's really an excellent product, especially because I come from a food and beverage background myself. And so I'm very interested in, organic food-based products like this. So I think it's fantastic products that they have. Packaging's very nice. Branding, logo, very nice as well. And so they're going to be, this company has a massive distribution partner list that's going to be, you're going to see this revealed more and more as time goes on. There's only so much they can say right now, but there is a very strong distribution partner list for this company and for Galaxy LLC and Galaxy Direct. And so you're going to see that they can definitely execute on these sales and revenue goals. And in case you were still doubting them, their president of GXXY, which is Rosalind and James, this is his previous company here, Ramtron. And Ramtron sold for $110 million in 2012. So the president of GXXY sold his last company for $110 million to a NASDAQ-listed billion-dollar company. So these guys are very knowledgeable when it comes to growing a business and when it comes to growing sales. And so we have the right management in place here to make this a big success, especially with the share structure being so tight. And then we're going to take a look at the chart, and let's explain a little context of what's happened recently. Right? So I've highlighted this area. This is a 2-year range. I'm going to bring it down to a 1-year range here. And I've highlighted this area here in blue, and this is where we are now. This is what I call the loading zone. Because if we look at the historical chart, and I'll zoom out one more time again, this has always been the loading zone on this chart. Always has been right here in this. It's a large range because it's a very small float, right? So it's a thin trading ticker, so the range can be large, but our loading zone range here is around 5 cents to around 11 cents, and that's our range, and that's where historically people have been loading the bottom, right? And so we're back at that bottom loading zone level. We've been around 7-8 cents as of late, and what that means to me is it's a very safe buy here with a lot of upside, in my opinion. And so if we look at the upside here, we can see previously it popped all the way up to over 25 cents. And before that, we almost hit 50 cents on a previous run on this stock. So huge upside from these levels. And you may be wondering what brought it back down to these levels, because you can see the stock was a bit higher earlier in the summer. Well, what happened is there was a little bit of a leak in the ship. And unfortunately, an old restricted holder decided to cash out. And it's really the first instance, and hopefully the last instance, of this happening on this stock. But what happened is they deposited 2 million shares, right? So the float had gone to 5 million to 7 million share float. And so now those shares are getting sold in the market. And so that caused the price to tank here because, obviously people were not expecting that, and the guy just kind of started dumping into the bid. But it creates an opportunity, which is called a liquidity event. And if we scroll down a little bit here and we take a look at the volume, it's had very, very consistent volume down here. So like I said, this is the loading zone, and you can see from the volume that people are loading, right? And so we've actually, if you calculate all the volume, we've almost churned out all of the 2 million shares that are being sold into the market. The seller should be done any day now. And what happens is, there's an old saying, volume before price. And so we have all this loading volume down here at this level. And I'll zoom in a little bit once again. And you can see very consistent volume here. And we have all this loading volume. So people are accumulating this seller. And as soon as he is out, what's going to happen is the ask will thin out significantly. And there won't be anything in the way of this stock, going back up and achieving that 15 to 25 cent range again. Likely with ease, right? Because there won't be any more suppression on the stock. The suppression is at the tail end now. And so there's going to be a lot of upside from buying these levels, in my opinion. Obviously, I'm not a financial advisor, as I have to say every video. And none of this is financial advice. And you could even call me an idiot if you want. But these are all my opinions. And I've been trading OTC for a long time. And I have a lot of knowledge about the exchange. So that's GXXY, projecting 30 to 40 million revenue at 2024, and literally right in the loading zone. Like historically, it's just always been, this has been the spot to load. So looking very, very bullish on this one, right? Because if we look at accumulation as well, it's holding up just fine. In fact, it's curling back up, and MACD as well just crossed bullish. So really everything is aligning here, especially considering the company has a lot of big news coming. Everything's lining up here for this to produce some really great returns from this area. And so that's GXXY. We're going to move on to another very popular stock in the OTC lately, which is Astra Energy, ASRE. Okay, and let's take a look at their share structure. This is an OTCQB ticker, so they're fully audited. And it's trading around 34 cents right now. If we look at their share structure, you can see the float is around 17 million shares. So once again, this is a low float. This is a very small share structure, which means not a lot of shares on the free trading market, which also means if there's high demand for shares, you can see explosive action. And we've seen that with Astra Energy. If we take a look at the chart, you can see it was trading under 10 cents not too long ago, and it reached 46 cents here. So there was definitely already an explosive move here, but a lot of people, myself included, still believe that this has continued upside, right? There's still a lot of upside here, and there's plenty of reasons for that. So first of all, they're doing a spin out of Regreen Technologies, one of their subsidiaries, where it's going to spin out an IPO onto NASDAQ, or maybe not NASDAQ, they just said a senior U.S. exchange, so NASDAQ or NYSE, right? Most likely. So spinoffs are great, because shareholders are going to get dividends of that spinoff, and they're going to get shares in a NASDAQ company while still also having equity in Astra Energy. So that's always fun. And then we can also look at this, and this is big, and I want to provide some context here, right? Because before I even read off this press release, let's talk about what people have been saying about ASRE. And you may have seen the narratives if you follow this stock on social media already, but you have seen that people are talking about it being a short squeeze. It's a naked short. It's a big squeeze, whatever you want to call it, and you hear the name Kramer thrown around a lot. So who's Kramer? What the hell's going on? Is it real? I'm going to address all of that. So basically, Kramers are toxic funders. The Kramers are toxic funders in the OTC and small caps world, where they are very predatory in their behavior, where they find these beaten down companies that really need money. They're having issues with financing, and the Kramers come in and they'll say, okay, we'll finance it, but we want a deal that we can't lose on. Okay, but it gets worse than that, because what these guys do, and there's other funders in this game that do that, that do what they're doing as well. The Kramers have just become the most infamous. But other funders are doing what they're doing as well, which is these predatory loans, and then on top of that, what they do is they make money on the downside by shorting the stock that they're also financing. Why do they do this, you might ask? Because you can make a lot of money on the downside when you can guarantee that you're going to be able to cover your short. And in this case, what the Kramers do is, because they have these share issuances from their loans, right? They're being issued shares in return for their loans. They can short, and then they can literally just cover their short with the shares that were issued to them from their financing. Okay, so that's what's called death spiral financing. And unfortunately, there are other predatory lenders out there that do this as well. And some people will say that it's a myth, that these people aren't shorting. I know they are because I kind of work with some OTC companies and I know what happens, right? And basically some of these funders do make money on the downside with death spiral financing. And so Kramers are one of the most infamous for that. But here's where it gets really interesting, right? Because we have this press release, Astra Energy's new CEO immediately pays off convertible note ahead of maturity date. So what does that mean? Well, guess what? That means that these death spiral funders that were planning on converting their note into shares so they could cover their short got screwed, right? Because now they're not getting their shares. The note got paid off in cash. So what happens now? What happens is they're going to have to buy shares on the open market to cover their short, right? And they might be hoping right now that the price of this stock comes back down so they can get those shares cheap so they can cover. But more than likely, it looks like retail's in control here. It's holding an uptrend. So it really could have a real squeeze potential here, right? So I'm not promoting the fantasy fairy tale land kind of crap that I see out there about naked shorts, where there's all these made up stories about this stock and that stock. But I'm telling you that in this context, it actually does make sense that there could be a short squeeze here because, like I said, you have these death spiral financiers involved. And so it is a real thing in this case. It's very hard to get data on OTC trading stocks about true short interest, true naked shorts, things like that. So we can't know that. So be cautious, right? Definitely be cautious. Don't drink Kool-Aid ever. Never fall in love with a stock and marry it. But the point is, there's a real case to be made here for a naked short squeeze with ASRE. And then, again, if we look at this chart, like I mentioned earlier, it's holding this uptrend. So I've drawn this purple trend line here from where it hit bottom and now from where it is now. And you can see, if you see right here, let me just zoom in a little more. This wick right here, big down wick. And then what happened was it was like a flash crash, and this was just a couple days ago trading wise. And it was like a flash crash, right? And then it was immediately bought back up, and so it resulted in this really long wick to the downside. But the actual, body of the candle was way up near the top. And so to me, that's a clear indicator of a short attack, right? Where shorts are just market selling short shares into the bid to try and scare retail. And in this case, it didn't work. And you can see support came in actually exactly on the trend line I drew. So we have held this uptrend very well so far, has not been penetrated once. And we also have evidence from this candle that, there's probably some short interest here. Because typically when you see a long wick down that's then bought right back up, that's what we call a short attack, where shorts are trying to market sell those shares into the bid to create panic. In this case, they failed, and the stock has actually rebounded, and we're holding that uptrend. So what we're looking for now is a break over 0.45. That's a key level up here. And if we can break and hold and close over that 4.5 level and keep going, then there's really, if we zoom out, huge upside here, right? All the way up to dollars. So very interesting stock, great volume. Again, if you look at the volume profile here, great volume, very steady volume, which is hard to find these days in OTC. So when you do see a stock that has good volume in OTC, it means you should probably keep an eye on it for a trade. So that's ASRE, looking very good there. And then we have CLNV. So CLNV is a stock that's right at support right now. Here's my purple line once again, right? This is the 2-year time frame. I'll zoom in a little bit for you. We're at the 1 year now. And you can see we're right at that support line. There's our purple line. There's the stock basing, tapping that line, bouncing back up. And now we had a nice, very green candle to close the week on Friday. And it closed just over this moving average line here, which is very bullish for us, because that means we could see a real reversal here, right? you can see that the stock had previously achieved highs up to 12.5 cents, almost 13 cents. So now we're down to 2 cents again, and the technicals are just showing us that, okay, this support line is holding. Okay, we had a very strong close to the week, right above that moving average as well. So we could really be looking at a true reversal here. And then we look at accumulation, and we can see accumulation just started curling up as well. And then we look at MACD, and we can see MACD is curling up as well. So I'm very interested to see if this stock can get a strong reversal, because it's a nice trading stock. It trades thin, and the company is doing some really great stuff. So let's take a look at the company. Here's our float for CLNV. We have 390 million held at DTC, so a larger float than GXXY and ASRE, but it's also a cheaper stock, right? And in this case, 390 million float is not small, but it's not huge either. It's not like your stocks in pink sheets that are trading with 2-3 billion share floats. This is a very manageable share structure for traders at this price range. So it's not something that's a tiny float or anything like that, but it's liquid and it trades nicely. And so in this case, 390 million is just fine for us. And if we look at their news, this is where we can take a look more at what the company is really doing and why people are excited about it. And so what they're doing is they're a clean hydrogen company, and they have some ways of kind of transforming plastic waste and things like that into clean hydrogen energy. So it's really innovative kind of breakthrough technology that these guys have. And we're going to look at their revenue projections. So for Clean Seas, which is their India facility, and then also Morocco here, right? We can see that the Morocco revenue alone, 5 years projected, we see 2023 they project 5.7 million. 2024, huge increase to 36, almost 37 million in revenue from Morocco alone. 2025, 60 million. 2026, 80.5 million. And then by 2027, they're looking at $82 million in revenue just from their Morocco operations. Now their West Virginia operations in 2024, they're projecting 12 million. And then all the way up to 2027, we're looking at 56 million. And that's just for West Virginia. Then we look at Arizona, 11 million for 2024. By 2027, 56 million. Okay, so these are massive revenue numbers, doing a lot more revenue than even a lot of the NASDAQ companies that are trading at multiple dollars, right? And this one's down at 2 cents. So obviously they need to execute on these, but I believe they will. I mean, they're active, they're in business, they already have revenues, And then we can look at they're getting funding, right? So other people agree that they're going to achieve these revenue projections as well, because the West Virginia Department of Economic Development just gave them $1.7 million non-dilutive financing. So they just got, and this was just on September 7th. So this was massive news. They got almost $2 million in funding from a government agency, which is a huge boast of confidence for the company, right? It pretty much confirms that this is very real, that the technology is very real, that the growth prospects are very real. Because now they have state funding, which is huge. I mean, you really almost never see it in OTC. Super, super rare to see state funding non-dilutive on an OTC stock. And again, this is OTCQB, so they're audited as well. So they're a totally legit company. So Clean Vision, CLNV. Again, I try to give these stocks out when they're at good levels to buy, right? So this is a stock that, just look at the chart, it's at bottom, right? So you're always, you never know what's going to happen in the stock market. Things can go wrong. Things can surprise you. You can be made a fool all the time, but you still want to always be considering risk versus reward and what are my odds. And when you're buying right here at this support level, you have good odds for success, right? So nothing's ever guaranteed, but you can definitely have good odds. And in this case, CLNV, just like GXXY and ASRE, is presenting good odds, and it's a good opportunity. So definitely keep CLNV in mind. Now we're going to be looking at the behemoth, as I have called it on Twitter, and I believe it is a behemoth. This is SFLM. This is a stock I've been super excited about. I've been on it, doing due diligence on this stock for almost a year now. Ever since they announced in in November 2022, a change in control. So SFLM used to be a jewelry company. Here they are. You can see there's even a little bit of remnants of the old company still on their OTC Markets profile because they're getting everything set up still. Right, so this used to be a jewelry company. And then here we are at 11/15/2022. SFLM Avon Corp announces the appointment of Chad McKay as chairman and CEO and announces new business plan. And here's our press release, right? So, who's Chad McKay? Why is this a big deal? Who cares about this change of control to SFLM? So, Chad McKay is this guy, co-founder and managing partner of Loyal Companies, aka Loyal Technologies. Why is that important? Well, because GXXY, which was the hottest OTC stock for quite a while, which went from 0.001 to 2 cents, 20x returns on merger announcement, that was done by this guy, Chad McKay, right? He facilitated the merger. He bought out their debt on GXXY. He pretty much did everything to make the merger happen on GXXY. And he installed his partner, Andrew Van Noy, here to be co-founder of GLID, which was the company GXXY merged in. So he was very much involved in the GXXY merger. And as a result, when you see his name pop up on SFLM and you see that the old business has exited and that is now a shell and that they're looking for a new merger, it's something to be very excited about. Because this is the guy who just delivered the most exciting merger of the year already, and now he has another merger he's about to deliver, and I believe this one could be equally, if not more exciting, and we'll talk about that as we get into it, right? So we know he's Loyal Companies, and we know that he works with Andrew Van Noy, the co-founder of GLID, and we know that he facilitated the GXXY merger. So let's take a look at what he has in store for SFLM now, because it's a big mystery, right? Nobody knows exactly what's happening. So he says, I'm very excited to become a part of SFLM. I've been in private equity for the past 15 years, and I've done a lot of exciting deals. Our team has built an impressive deal flow of prospects that could be acquired or technology that could be licensed by SFLM. Okay, and then if it talks about here, let me just find it where he says it, but it talks about in this press release looking at lithium mining as well as lithium mining technologies for acquisitions with a university partnership. So let me see, because it's not... There it is. Here we go. So, right, we have... McKay continued, our goal will be to add acquisitions and or licensing agreements to technologies that we believe will be accretive to the company and our shareholders. For example, we are working with one credible university on some amazing technologies in the lithium mining industry that could be really important to the future of electric batteries. So, okay, that's where our speculation is. Now we have something to go off of, right? So how can we use this to try and find out what the merger is going to be? Well, it just so happens, remember his partner Andrew Van Noy, who was co-founder of the GXXY merger? Well, he is actually founder of another company here, Deep Power. And so this is Deep Power, unlimited clean energy below our feet, geothermal drilling technology. And remember, here we are in the press release. Let me just go back. Here we are in the press release, right? Where it says right here, lithium mining industry and drilling technologies, okay? So, all signs point to Deep Power here, right? And here's another part. Deep Power announces R&D program at the University of Oklahoma to develop its breakthrough geothermal drilling technology. So Deep Power has the university partnership, which was mentioned in the SFLM PR, and it has the lithium drilling technology, which was mentioned in the SFLM PR, and its founder is Andrew Van Noy, who is Chad McKay's partner in Loyal Technologies. You seeing where the puzzle pieces come together here? And if you're not, I don't know what to tell you. So Deep Power, they have quite a bit of web presence. They do these podcasts. They also got $2 million here in funding from their Series A venture investment. And here's another puzzle piece, right? They press released this, closing the Series A venture investment for $2 million. And they press released this on November 15th, 2022. And when did SFLM press release their change of control? There it is, November 15th, 2022, the exact same day. So there are so many signs pointing to this being it. And why are we talking about SFLM now if all this stuff happened in November of 2022? Well, because SFLM was dormant and quiet for all of this time while they kind of work on the background on this merger, right? So it's even yield sign still, which means it's not fully pink current. So they still have a couple filings to submit before they can announce the merger and release the news. So we're very, very early here in the story. And there's a huge story developing, and we're extremely early. And that's where really big gains can be made in the market, is by being so early into these big opportunities. And so what's happened was, and we can see from Wild Rhino here on Twitter, on August 23rd, SFLM got verified profile. And this is what a lot of people were waiting on. And what that means is that after there's a change of control with a ticker, it takes a while for OTC markets to approve new management and let them actually work on the ticker, right? And so finally, it took forever, but on August 23, 2023, this is when, boom, the bomb drops, verified profile hits. That means, okay, now Chad is in control of SFLM. He can make updates, he can upload filings, he can do all of that stuff. So we're really just getting started here. What we're looking for next, if we go to their disclosure page, they have their annual from April. We'll probably need a quarterly filing or two, and then we'll need an attorney letter as well. By then it will be pink current, and then we're assuming that the merger will be announced shortly after, because they've been preparing for this for a long time now. And actually, some people on Twitter have already called the CEO and been like, hey, what's up, man? And he's like, yep, don't worry, we have news coming. We're just working on getting pink current, and the story's gonna unfold, right? So we know what's coming here, basically. Deep speculation right now that it is Deep Power. And if it's not Deep Power, it's going to be something very similar to this, most likely, based on the description of the merger. But Deep Power is very legit. It has this huge partnership with a top petroleum engineer at University Oklahoma. They have $2 million in funding already. And it's just super high-tech stuff that really can be used in a ton of different industries, especially electric vehicles, because of the need for lithium and the need for lithium batteries. So that's kind of the SFLM puzzle pieces. It's looking like Deep Power is going to come in. It's SFLM, guys, I can't stress enough. I'm so excited for this one, because really what gets OTC jazzed up and what really creates huge runners is a great story. And SFLM has a really nice story developing here. A lot of speculation, a lot of unknowns, and everything that we can piece together looks fantastic so far. So very much looking forward to SFLM. And I hope you guys enjoyed some of my due diligence on that. And let's just go back to the chart one more time, because I want to talk about, once again, I have my purple line here, this time acting as a resistance line. And we can see it's a strong resistance at 0012. And what's going to happen is, if we do break over 0012, which I'm sure we will as the story develops, then we have upside here to over 002, right? So if you're buying in trips, you're looking at easy 3 to 5x from here, I think. And that's certainly what I'm holding for, if not more. I think it's a no-brainer trade here in trips. We'll see if I'm right, but that's my opinion. And I have the due diligence to back it up, and it's one I've been researching for almost a year now. So very excited for SFLM, and one of my top watches in the OTC for sure. And that's actually going to wrap up our video, guys. I know a little bit long, but we have some really exciting stocks to cover, and I wanted to go in detail on all of them. So I hope you guys learned and appreciate this video. And I will see you next time. Thank you very much.